You're 25 years old. You scroll through social media. One person is day trading. Another is buying crypto. Someone else is predicting the next stock market crash. Everyone seems to have a secret strategy. Everyone except you. You have $1,000 saved up. And honestly, you have no idea what stock to buy. You don't want to stare at charts all day. You don't want to guess which company will dominate the future. You just want your money to grow. So after doing some research, you find something called the S&P 500, a collection of 500 of America's biggest companies. Instead of betting on one company, you buy a tiny piece of all of them. Apple, Microsoft, Amazon, Google, hundreds more. You click the buy button, invest the entire $1,000. Then you make a strange decision. You forget about it. A few months pass. The market goes up. Your investment grows. Then, suddenly, bad economic news hits. Markets fall. Headlines scream. Stock market crash. Recession fears. Investors panic. Your friends start selling. Some swear the economy is doomed. You check your account. Your investment is worth less than before. You feel nervous. Maybe you made a mistake. Maybe you should sell too. But then you remember your plan. Buy. Hold. Wait. So you do nothing. Months later, things get worse. The market drops even further. Your $1,000 investment becomes $850, then $800. Watching your money shrink isn't fun. Every instinct tells you to escape. But history shows something interesting. The market has crashed many times before, and eventually recovered every time. So instead of selling, you leave it alone. No panic, no predictions, no emotional decisions. Just patience. The hardest investment strategy suddenly becomes the simplest. Doing
absolutely nothing. 5 years pass. Life gets busy. You focus on work, friends, family, learning new skills. You rarely check your investment account. One day, you remember it exists. You log in. The market has recovered. And then some. Your investment is worth much more than when you started. The companies inside the S&P 500 kept growing. New technologies emerged, businesses expanded, profits increased. And because you owned a piece of the entire index, you benefited from all of it, without needing to predict anything. You decide to do something smart. Every month, you invest a little more. Not thousands, just what you can afford. Maybe $100, maybe $200. Sometimes less, sometimes more. The amount isn't what matters. The habit is. Month after month, year after year, you keep buying, whether the market is up or down. You don't try to time anything. You simply stay consistent. Most people underestimate how powerful consistency becomes over time. Then it happens again. Another market crash. Experts argue on television. Investors panic. Social media explodes with fear. People claim investing is dead. Some sell everything. Others swear they'll never invest again. You look at your portfolio. It's falling rapidly. Thousands of dollars disappear on paper. But this time something is different. You understand what is happening. The companies haven't vanished. The economy hasn't ended. Stocks are simply cheaper. So
You keep investing while everyone else is running away. Years continue to pass. The market recovers again and again and again. You start noticing something. The biggest advantage wasn't choosing the perfect stock. It wasn't predicting crashes. It wasn't having insider knowledge. It was staying invested. Most investors lose because emotions control their decisions. They buy when everyone is excited. They sell when everyone is afraid. You did the opposite. You stayed calm.
and time rewarded you. 15 years after your first investment, you open your account. The numbers surprise you. Not because of a single lucky trade, not because of a once-in-a-lifetime opportunity, but because small gains kept building on top of previous gains. This is compound growth. Your money earned returns. Then those returns earned returns. Then those returns earned even more returns. Year after year. Like a snowball rolling downhill, growing larger with every turn. Now you're 50. You remember that day when you invested your first $1,000. Back then, it felt insignificant. A tiny decision. Almost boring. No excitement, no flashy headlines, no overnight riches. Yet that simple decision changed your financial future.